So we got some CPI data in today, and basically core came in at 6.3%, and headline inflation is at 7.7%. So, guys, it's been a long, crazy day. Been doing a lot of FTX videos because it's just been breaking news after breaking news after breaking news, and there's still more. But I'm a little bit tired at the moment because I made like 7 videos yesterday. So give me a little bit of time to get a little bit of rest. I am human. I do need some rest sometimes. But I just want to have a general chat with you about the market. So people are wondering, is this the bottom? I still remain bearish. Could this be bottom? Sure, it totally could be. But I don't think there's a ton of upside. The reason is why I say that is, remember, the Fed wants 2% inflation essentially, okay? And if we're reading core at 6.3, and they look at other indicators as well. They look at unemployment, these kind of things. I think unemployment, last time I checked, I think it's 3.7. Correct me if I'm wrong. I'm just so tired right now, but I think it's 3.7. And it keeps saying you want unemployment around 5%, something like that. The Fed has said publicly that they think it's going to be 4.5. So I think those things are still on the table, meaning more people are going to lose their jobs. The thing is also too, which is very real. Sure, the market could rally till January, February, just for example. But problem is that next earnings season and the next couple, earnings might start coming in light for companies. And the main reason is because if people are losing their jobs, meaning that if unemployment does indeed go up, which I expect it to, and the Fed expects it to as well, let's say it goes up to 5%, a lot of people lose their jobs and a lot of people lose buying power. And so then companies say, like, for example, Apple, have less people out there that want to buy their phones. Now, for example, if you do want to buy Apple stock today and you're looking for a long-term investment, is Apple going to be better 10 years from now than today? Probably. Do I know for sure? No, I don't. But yes, probably. The things that's always tricky is like what to do about the companies that aren't Apple, right? Here's the reality. I lived through dot-com bubble. I lived through 0809. Now, here's something that's very real. When you look back in history, and it's like hindsight 2020, it's so easy. Oh, yeah, you should just buy everything at the bottom and you're going to be really rich. Here's the thing, however, what you don't see is when you look at like charts and stuff like that, a lot of the companies that went bankrupt and went to zero disappear, and they don't even really show up on Google Finance anymore, so they don't appear. And so kind of what you see if you ever go back and look at old charts of like, your Apple, your Microsoft, your Amazon, it's just, for example, these kind of things, because this is something that essentially scammers try to do. They try to say, oh, every company's going to be like Amazon, and you're going to buy it really cheap and it's go up like crazy. And moreover, when you look at the charts, it'll appear that Amazon was a penny stock, but it never was. I want to make really clear on this. A lot of these big companies were never penny stocks, just Google Finance adjusted for splits, okay? And the other thing too, which Google Finance also is, it kicks off all the losers. So what I mean by that is like, let's say, say the dot-com bubble, there's a bunch of crazy hype companies, right? And basically everything crashed, and then 1% came back. And so what you got to do is if you are indeed, looking around for like, okay, these are the companies that I think are going to do great in the future, et cetera. These are the hype, but some will come back. Yes, some will come back, but you want to be looking for ones that, have a decent amount of cash on hand. If they're burning cash, how much longer can they survive? Because you can't burn cash forever. Because ultimately then you may need to borrow money to keep in operation, but with interest rates so running so high, it just becomes a losing venture, and you're going to, potentially go bankrupt. And I will say a lot of companies are going to be like that. So something like, say, like, for example, like a Carvana and all those used cars companies, those look pretty bad. They look in really bad shape right now. Maybe one, survives, maybe, but it's tough. Okay. So that's one thing I would be really leery of if you are looking to get into these kind of companies. Just look at their cash burn, look at their cash levels, look who their CEO is, and look at their competition, right? You want to go with the leader. You don't want to go with third, fourth, fifth. I say maybe second place, but you want to be with someone who is a winner. You also want to be in a company, if you aren't in stocks, that has a moat around it, meaning that they have something special about them that other companies can't, eat their market share. Because sometimes people ask me, like, I'll give you a really simple example. If you look at like say PayPal, a Toast, there's a couple other in this like fintech payment space, and this is sort of like when you go to the restaurant, and I know this is that it's regional. In LA, everyone's using Square, in fact, and it's like the point of sale kind of company, right? But if you go into like the East Coast, I think it's like a lot of it is like Toast, at least in the Southeast when we were in North Carolina. It varies by region, and people, essentially merchants, they don't necessarily have a strong allegiance to any particular one. They just go with whatever it gives them the cheapest, margins or whatever. And so then people change quite a bit. And in fact, they'll bring, whatever brings their costs down, they'll just switch whatever. So people don't necessarily have loyalty to these kind of things. This is why moats become really important to companies. The other thing too, going around the markets is, pay attention to what's going on with Biden and China. I noticed that Biden's going to meet President Xi, and they may be negotiating something to try to end the war and say, hey, let's be friends again. Cut your ties with Russia and stick with the USA, and maybe things cool off. I'm just saying, maybe it's possible. Who knows? I can't predict those kind of things. Watch what's going on with the Evergrande situation also in China. Every time I check news on that, it's always bad. I can just tell you here in Korea, we're having a credit meltdown, and I think the things are connected because money essentially flows. Certainly today feels like a good day. I can see the markets. I can check right now. I think markets are up as I'm watching this right now. Yeah, Nasdaq's rallying 6%. Unreal. S&P 4.63 and the Dow Jones 3%. I just laugh. I just feel like we're in a clown market right now. I mean, it's just things are up and down so much. And the thing is, it's like I just don't expect things to go to the moon like they did, say, from 2020 bottom to the top. I just don't see where that's going to be the thing, because there's no stimulus check money coming, right? And we know the Fed's going to keep interest rates elevated for quite some time until we get that low inflation rate they want, 2%. So sorry, I'm kind of rambling on a bit. Like I said, I'm a bit tired. I'll try to do some more details a little bit later, but FTX, they put out a really official statement of I'm really, really sorry. I made just a video about the influencers recently. They're trying to run away from being connected with that. Basically, they're just sorry for being caught. It's my thoughts on that kind of thing. Other things to think about as well. Elon Musk is going all out on Twitter. I think it's a real shame because he's still abandoning Tesla and stuff like that. And we'll go into some more details of those kind of things. Anything else interesting worth mentioning? Oh yeah, the other thing is too, a lot of the companies, they're going to be announcing ways to cut costs, right? So you're going to hear about companies firing people and also cutting costs. So Amazon's going to be doing that kind of stuff. Facebook's going to do that kind of stuff, right? And you'll see Google and Microsoft. So a lot of times what happened was that companies have sort of their experimental division, research and development, right? And also too your marketing and advertising kind of things. And so they're going to be looking for cutbacks because again, a lot of these companies kind of spent way too much during the bubble of free money and stimulus check sort of era. And the other thing too, which I think is important to understand is, be diversified. If you have some cash, have some bonds, have some stocks, right? Different kinds of things. Don't put all your eggs in one basket. I say that quite a bit. Just being real on that. And honestly, the best way to be successful, and I know we want to talk about markets, and I like to talk about stuff because it's fun for me too. But focus on your career and focus on building job skills that people want to pay you money for. And I'll try to put out more videos about that, guys. I was talking about these things for quite a long time. You can find my older videos in the productivity playlist. But talking about writing your resume, networking, these kind of things. I'll try to put more of that kind of content out there because I'm trying to help you. As we're going to recession, a lot of people are going to be laid off, unfortunately. And, I think, it was half a Twitter workforce is that as well. We're still not sure what's going on with the politics in terms of who controls the House and the Senate. I think Republicans are going to take the House. That's what the predictions are. The Senate's still up for grabs. There's a runoff in Georgia, which is kind of crazy. I'm surprised that it's this close. And there's a couple other states. I'll try to do some more details. Again, I just need to get some sleep right now. So I do appreciate you guys' time. I hope I'm real clear on these things. If you're curious of what I look at, you can find my older videos on finding market bottom. They're easy to find on my channel. I look at the same kind of stuff over and over again. The PE ratios, the Buffett indicators, those kind of things. And the thing is hey, if you're a long-term investor and you want to grab some stuff, we're not at the top. The good news is we're not at the top, and you're not buying at top, and you got to do what's best for you. I can give you my opinion on these things, but no one has a crystal ball 100. You just got to essentially protect yourself by going for the best decisions. One of the good advices I have for you guys is when I either look at stocks or I look at jobs or who I look at partnership in, I'm purposely looking for red flags. And I'm purposely trying to be, really cautious and sort of making the best decision possible because I don't need to buy everything. I don't need to be in every company. I don't need to take every job. I'm just looking for those, great opportunities that I see have the most upside, right, and the limited downside. And that's what you got to do. You got to manage your risk. So we'll have more talks about these things, and that's my thoughts. So thanks again for watching, and I'll catch you guys in the next video.